What's going on, guys? What's going on, guys?
What's up, everyone?
Thank you guys for joining us for this live special edition of the After Hours podcast. This is our first time using this kind of setup and doing anything live. So if you could drop a comment, if you can hear us, if you can see us, if everything looks all right.
Can everyone see us?
Are we moving? Are we good?
Are we good? Just write in the YouTube chat if you can see us. Looks good. Awesome. So this podcast we were going to do with Bao, and Bao is going to show up, but he's going to be about like 10 minutes late or so. So we can just get everyone in here, talk about some stuff or kind of do whatever, make it interactive. Classic Bao, a little bit late. That's all right.
So basically this episode, we talked about doing kind of a private one originally, and we thought that it was a better idea to kind of get everyone involved in the community, on all social media platforms, just so we could all be better prepared for the week ahead. I think obviously everyone knows the main topic is going to be the collapse of Silicon Valley Bank, and the cascading effect that that's going to have on the overall economy and everything like that. So I think we just got news, Harry. What was the last? Another bank just collapsed or just was closed by regulators, correct?
Yeah, Signature Bank was just closed by regulators. I didn't really hear too much about that yet.
Yeah.
We got the reason why, but
so Signature Bank has been closed by regulators, and then as well, the FDIC, they're going to back the depositors of Silicon Valley Bank. They're basically saying that everyone come Monday will have access to their funds. Now, what that means for the actual bank and for the people, stockholders, all of that, they have said that they are not going to back it. They are basically going to let it collapse, which is crazy. So now we're at a point where they are looking for a sale, right? They basically are going to need someone to purchase the bank to keep it going, keep it afloat. And it's kind of seeming like if they don't get a buyer by the end of this weekend, things are really going to break. Things can get really, really sketchy.
I completely agree. And I think really the main cascade is like a lot of people are looking at this and saying like, oh, like how does this affect me? How does this affect the economy? A lot of people are not getting their payrolls who worked for a lot of these tech startups that were actually banked by Silicon Valley. So that's a big problem for, people who are just living paycheck to paycheck and people who are working for these firms, running their payroll through Silicon Valley, getting paid through Silicon Valley. That is the biggest ripple effect. It's definitely something to be worried about, I would say.
Ruda, I see you saying that Elon should buy it. That was like the big rumor, right? Because he tweeted at I forget who he responded to, but he said he's been thinking about it.
Yeah. And to me, I would, I don't think Elon's going to buy that. He's had enough of a stretch with Twitter, I think. But for the most part, I just think the overall events and the overall stuff like that is crazy. Some people are saying let him fail. Other people are saying, keep him coming. I doubt he'll buy it, as David said. But it's definitely wild.
I'm excited to see because Bao is someone who's been in this industry for a long time, going over 20, almost probably 30 years of trading stocks and equities. And he's just been around the overall markets and he has a lot of insights. And he was there in 2008 when we had the great financial crisis. So he really wanted to come on today, which he just said he will be here shortly and kind of give his insight into how everything happened then and kind of what he sees similarities now. And he has a really good way of explaining how these things go. And so I'm excited for him to get on here as well.
Yeah. And if we're talking about just the story of Silicon Valley, how everything happened and how we even got in this spot, Basically, Silicon Valley Bank invests in a lot of tech startups, and obviously through the pandemic, tech went absolutely crazy. The bank made a shit ton of money. And what happened is that the bank ended up investing in a lot of like bond mortgage-backed securities. And as interest rates went up, the value of those bonds went down. And then obviously there was rumors about the bank not having enough liquidity issues. People started taking their money out. Power of social media is crazy. People started to get scared. They started to do kind of a run on the bank. I guess the bank took like a big loss kind of before that. The CEO started selling off some stock. It was good enough for a bank run on the bank. And then after that, just collapsed. So, that's pretty much the Silicon Valley story where we're at right now. Now, also where we're at is we've also seen Signature Bank just randomly closed by regulators. We don't know too much about that. So, yeah. And also on the podcast coming up later, if you're, just joining us, Bao's going to be joining us to talk about his experiences. And it's good to hear someone who was actively trading in the 2008 crisis, someone who was, sitting there day trading stocks, in the 2008 crisis. It's really good to hear from people who are kind of older than me because, like, what grade were you in 2008, James?
I was in 8th grade.
8th grade, yeah. So you're a little bit younger than me, or you're a little bit older than me. So, I was a fucking infant.
Yeah, no, I think one thing too that's really interesting is for everyone here who's been listening to the podcast these past couple of weeks and listening to Harry and I and Alex when he'd come on, we've been talking about the effects of the Fed increasing rates and just pushing interest rates higher and higher, and the effect on the overall economy that would kind of bring on. And I think now, we've said for a long time that we needed a news segment, something catastrophic to happen that might trigger either a stock market crash. It will, trigger more forward and backward direction in the S&P. And I think we might have gotten it. The reason all of this happened was because the Fed just increased interest rates at a really rapid rate. And this bank, did not have funds actually to back what they had in money due out. And I think now it's kind of coming on to show into, it's coming out now how many major banks somehow sneaked by regulators. I'm surprised. Yeah, exactly. I don't really understand how regulators let this actually go by and actually sneak on for so long at this point. They're a major bank. They're a top 20 bank. And it's kind of scary to think that, what's going to happen in the next couple of months. Are people, our customers going to feel that they need to bank at a top 4 bank like JP Morgan? Because as much as people don't want to throw around the term, too big to fail, JP Morgan, Bank of America, Wells Fargo, they are too big to fail. That is a bank that would unfortunately would have to be stepped in by, the FDIC, be stepped in and saved if anything were to happen. Yeah. So, what that's going to mean in the short term, are people going to be pulling money out of smaller banks? Are people going to be, we always say the term bank run, but what does that really mean? Are people going to be spooked by all this? And I think that I think Yellen and Powell, and I think they're doing what they can right now to kind of ensure safety and some security in people. They're telling them that their money's going to be there tomorrow, but I don't know. I don't know if we can actually trust that, and I don't know what that's going to mean. I think a lot of people are still going to run to take their money out of the bank because it's scary. It's scary right now not knowing if you're going to be able to make payroll. If you're a startup and you're the CEO of a startup or you're a venture capitalist, you might not be able to make payroll this week, right? It's a little horrifying.
Yeah, no, I completely agree. And also, I'm not sure if anyone saw this over the weekend, but there are reports that, love them or hate them, but Harry and Meghan lost a ton of money. They were fully invested in this bank. There were some reports that Oprah lost close to $550 million, which is crazy. So yeah, there's definitely a lot of, uncertainty. And, for some people, it's crazy.
Yeah, I think it's at a time right now where it definitely is scary. Again, they're saying depositors are going to be backed, but the reality is, these people are carrying a majority of their wealth in banks as an individual, you don't have the due diligence and the ability to even do that level of due diligence on a bank to know, hey, what are their risk models? What is the risk parameters? When you put your money into a bank that is FDIC insured, you're just assuming that the bank is doing everything they can to protect their risk and to protect the downside. And just to wake up in one day, I mean, it happened over the period of 3 days, and
Yeah.
I think it's really scary. And I think that we're going to find out, just how liquid a lot of these banks are. I think that we're very blessed right now that the government only has to deal with 2 banks collapsing, rather than if they let this go into the week, who knows? And these smaller banks don't have the liquidity that these banks supposedly did.
Yeah.
And he's right. I see comments like the leverage is a mofo. It's true. These guys have over leveraged themselves. They've put a lot of risk on these startups and the capital allocators that would bring money back into the bank. And it's not looking like these guys are as honest and upfront as we could have thought. We would have liked to hope they were, as supposed protectors of our funds.
Yeah, for sure. And, I'd like to do something kind of like interactive, because we are kind of sitting here, we are waiting for Bao to really kind of get this started and talk about some stories and stuff like that. And, in the comments, maybe write, like, do you think that the U.S. Government is going to bail this bank out, or do you think they're going to let them dry? I think, I don't really know what's going to happen. There's reports in the morning that the government is not going to bail them out. Now, later, there's reports that the government could be potentially bailing them out. Everyone's saying a different story right now. So maybe in the comments, do you think the government is going to bail these guys out, or do you think they're going to let them dry? Be interested to see what people think,
Harry, what do you think?
Personally, I think that they're going to protect the everyday citizens, and the rich people are just going to be left to fend for themselves. Through with the government that we have right now, the people who are elected in office right now, it seems to be that their kind of agenda is, trying to make it seem like they're not helping rich people at all. You see Biden come out with 40% capital gains tax that he wants to do. He's talking all the time about oil companies, that oil companies are having too large of profits all the time. At his State of the Union speech, it was really geared towards attacking these kind of people who are wealthy and like large corporations. So to me, I think that this is the perfect time, if you want to keep on that agenda, to say, hey, look, we're not bailing them out this time. We're not touching them, we're not going to bail them out. We're going to make sure that the depositors are going to be insured. We're going to help those people out, but everyone else, they can fend for themselves. And I think that could be a very real scenario with this kind of agenda, right?
Yeah, well, I think it's really known right now that they've already said that they're going to at least back the depositors. But the reality is they need another bank to come and purchase Silicon Valley. And what I worry about is, back during the financial crisis, JP Morgan was helping out, was trying to help out Lehman. They were trying to help out other banks, and they caught an insane amount of backlash and frustration from the government. And I think that they're going to struggle materializing a purchase sooner rather than later. And I think that's the cascading effect. As of right now, we're at a point where tomorrow is going to mark a really, really interesting point going forward, meaning we're going to really find out how many banks this actually kind of like cascades down into. And, I think they're working really hard because they know there's serious contagion risk. I think that, we're at a point where it's really scary to think, like, how deep do these guys go? A lot of cryptocurrencies and a lot of crypto companies bank with these guys. And it just seems like now all of a sudden they're without funds. And now it's kind of waking people up too, to these startups, in these, hopefully founders and everybody like that are going to be smart enough to kind of take their money and hopefully put it into multiple different avenues and different banks, so that way they can safely keep their companies afloat when something like this happens.
Yeah. And you also saw that cryptocurrency, USDC, I believe it was, that depegged over the weekend.
Yep.
That's pretty crazy. And there was also another guy on Twitter, Cameron Foose, I believe, that he was talking about how he lost $2 million in one of these depegging schemes. And that's crazy, like, it's absolutely nuts when you have these coins called like stable coins or whatever they are, and then all of a sudden they just depeg. And, what are you left with, right? Which is crazy. So there's a bunch of things just going down. I believe Roblox wasn't affected. There's a website called Etsy or whatever where you can get people to do things for you. Like maybe you want like a custom shirt, or maybe you want like a custom cutting board.
Yep,
Yeah,
exactly.
and their deposits were withheld over the over the weekend. So a lot of people didn't get paid, and there's a lot of people who are struggling to get paid right now, and that is the impact on the economy itself, where it's not just like a venture capital fund went down and a bunch of rich people went down. That's what's crazy. I heard on Twitter that Oprah is down $550 million. That was the rumor about Oprah, was $550 million. Roku, the TV company, had millions in there. Roblox, millions in there as well. So there's some crazy rumors circulating. Harry and Meghan apparently want to keep it confidential. Apparently Harry and Meghan now are suing their financial advisor who advised them to go to Silicon Valley in the first place. So there's so much drama around this.
Yeah, I think though this is kind of where people have to be really careful though, right? Because the idea of a bank run is solely people getting scared and pulling money out of their own bank, right? And people pulling money out of a bank that they think there's going to be no funds on, and funds are there the next day. So by seeing all these crazy headlines and stuff like that, when the federal government, they were going to step in. They, it took them a few days to figure it out, but have now said they'll back depositors. So like all these crazy rumors and crazy things swirling, it's almost like it's like fear bait, right? Like it's scaring people into thinking that they're not going to have their money tomorrow. So I think that's where a lot of people have to be careful. And I think though that this wakes us up to the actual risk of pushing rates as high as we are. Powell has said he's not going to stop until he is at his mandate. That 2 to 3% inflation model that the federal government has. And I think this is just showing how bad things can really get on a large scale. I mean, we took down a bank by increasing rates at a rapid rate. What is this going to do to the average person, right? And that's kind of like something that's going to be interesting to hear from Bao, is just like what happened in the world when this happened the last time, when the world really went down and banks were failing. I mean, it's not every day that you see a bank fail. You don't usually see people being scared that they're not going to be able to get their money, right? I mean, most people out there, average Americans don't have more than $250,000 in their bank account. So that FDIC insured is plenty. But when actually the wealthy people and the people with over $1 million in their bank or over 250,000 start getting spooked that they're not going to be able to pull money out tomorrow, I mean, what's going to happen? What is going to happen in the financial system? Are people going to start losing, confidence in our banking system overall, in the US dollar? Are people going to flood the cryptocurrencies for protection, which sounds crazy, but who knows? People have always said that, cryptos were unregulated, and that was what the scary thing about them was. But in the reality is there's regulators in banks. Yeah. And so it's going to be interesting to hear. And, I'm really excited to get Bao on. Bao was dropping off his son. He will be here.
Bao is here. Bao's getting logged on.
Yep.
What's up, Bao?
Just like that, the devil appears.
Yo, we see you.
Bao's always looking in the wrong direction. I've never really understood why, but Bao, we can see you. Kind of like that grandpa of the group now, where you just have to give him a minute. Oh, Harry, you might have to turn on his mic.
Can you hear me?
Yeah, there you go.
Yep.
What's up, Bao? Maybe needs a hearing aid.
Can you hear me?
Yeah.
Yeah, but I think you have the wrong mic or something like that. You're just very faint.
This is like trying to help my mom trying to figure out an iPhone. That's kind of what I feel like right now.
Can you hear me?
Yep.
Can you hear us?
He's looking the right way. As you guys can see, this is obviously our first time doing this. Maybe if we all start yelling at him, he'll see.
Yeah, the funniest comment I just saw was Bao is setting orders for low-hanging fruit.
All right. Can you hear me, guys?
Yeah, we can hear it. Can you hear us?
I can finally hear you guys now. Good.
There you go.
Can you see my ugly face?
I can see
Yo,
it.
Bao, do you have AirPods?
You hear an echo? Why?
No, it's just we can't really hear you well.
Really?
Yeah.
You cannot hear me well. Okay, let me turn off my. You cannot hear me well. Can you hear me now? Is it only hair or is it everybody else?
No, I mean, honestly, I can hear you.
All right, let me put it closer.
There you go.
Okay, can you hear me now?
Yeah.
Is it better?
Yeah.
A little bit. Maybe it's just me, though, who can't hear you well.
I don't know. In the comments, what does he sound like to you guys? Sounds good. Got better.
Can you hear me? Okay, I'm going to talk right now. Can you guys hear me or not? I can. We got a good turnout, guys.
Yeah, no, very good. They're saying it sounds a little faint on there and a little rattly.
Yeah, it's a little bit faint.
Yeah, my microphone's jacked up, I guess.
I don't think it's hooked. Oh, yeah, maybe. Is it hooked up?
We don't have an MIC.
All right, can you hear me now?
Yeah, I think we can roll
good,
this
guys?
now.
What do you think, Harry?
Maybe if you click on the
Comedians.
Let me get
do you
my
see your face?
Okay,
Like-
see my face, yeah.
The three of us, and if you click on the three dots, like on your face,
Okay.
and then click edit mic settings at the bottom.
And it says stop. Okay, then what I'm going to do settings. Let's see. It's the audio. Where's the video? Okay, microphone. Oh, I know why. My bad, guys. So the first time using the stream thing, and it's not set up. So it's got it on a different setting. Okay, hold on.
Yeah.
Now,
no, that's why
now
I
you
just
can hear
wanted-
me.
Yeah, now we can hear you. Yeah, I just
All right,
wanted to
it
make it
was-
better because I knew we could.
That's perfect.
Because what happened was it's defaulted to my camera. Okay, so now we're
Yeah.
good, right, guys?
Yeah.
Now I'm too loud. Now you're telling me to shut up. So this is great, guys. I guess I'm a little dark, but let me turn on.
Bright lights.
That's even worse.
Light's too bright. Light's not good at all.
He's about to go get his big special camera from the back. You know, the light.
The funniest comment was
I don't do
Bao putting
selfies
oil.
and shit. So
I thought you sold pictures on the internet.
that's NFTs, dude. That scam is over. I got an idea. Hold on. I don't know why you. I guess you guys want to see my ugly face, but
We do. We love seeing it.
no, but it's like, you know what? The deep fake stuff could be anybody, guys.
That's true. We could all be deep fakes. I wish someone would make
Who wants to be a deep fake of us, though?
I was gonna say that they could make a better looking deep fake than me, hopefully.
All right. What do you think? Nah. I think it's coming from the wrong side, to be honest. Hold on, guys. I'm just really not peering, but give me 1 second, okay?
As you guys can see, Ben uses his own lighting and videography.
As you know, we are day traders. We are not these online guys. So I don't have a studio here with my face on it. You should be scared if some guy has like a studio and he's like pretending to be a day trader, right?
That's how you know it's fake. First time ever meeting Bao, everyone's always shocked. He's just wearing a t-shirt and short sleeves.
Yeah, seriously.
I don't. There's a.
Come on. So how many people we got on, man?
We have 250 right now.
Not bad. No.
Whoa! So you think if we wait, we get more people?
So we have 250 people watching you move a lamp back and forth and get
Yeah,
the
I know,
Yeah.
man.
they really need.
Hey guys,
got
so
that.
yeah, excuse me. We were trying to get this podcast out as quickly as we can. It's because I know trading is on Monday. I'll talk about my trading plans for the stock as well. So how about just screw this light, right, guys?
Yeah,
Yeah.
fuck the light.
Just imagine I'm a really tanned individual. All right, guys. So welcome to the podcast. We're done. We'll see you later, right? No, but so it's been a long time, guys, since I've been on this podcast. But I called this emergency meeting pretty much like yesterday, right, guys?
Yeah.
I was like, please. Everybody's talking about it, and instead of me having to answer 1,000 people one at a time, including my friends back home, I decided to say, hey, let's get this podcast out, and we need to get it out before the market opens.
Yeah.
Because a lot of, who knows, a lot of our viewers or listeners have accounts at Silicon Valley Bank or some other bank. The last thing we need is for you guys to worry because you're afraid your money is not safe. So where have we started, guys? So what do you guys want to think? So I'm assuming you've heard about Silicon Valley Bank, and that's why you were here. So we don't need to get into. So the reason why it fell is this, guys. Okay, so I've done a little research on it. Banks fell because of a couple reasons. Scams. In this case, it's not a scam. It's, in my opinion, this is my opinion. I'm not a lawyer. Don't sue me. I think they fucked up their fiduciary duties. Their risk manager didn't understand what the hell is going on. They had so much deposits where they didn't know what to do with the money. So they got really greedy. And so I'll tell you why they got greedy. So it's funny because let me bring up, can James, you pull up, remember we posted who the chief administrative officer or
you tweeted that out earlier, correct?
Yep. And I'm going to show you. So this is where I'm going to start, guys. I'm going to tell you exactly what happened, why the bank failed, and how you will protect your money.
If someone can find that post and post it.
Yeah, let me send it to the group chat. It's on Twitter.
Okay.
It's basically, so the guys, dude, the banking industry, to be honest, is very small, just like trading. I'm a trader. You guys all know me. Harry's a trader. James a trader. It's a small community. People know each other, right, guys? And so the same thing happens in the banking industry. And so a lot of the executives get recycled.
I found it right here. There we go.
Yeah. So this is a good segue into this because they did not learn anything from 2008, guys. And so you guys find it?
I sent it in the WhatsApp.
What happened?
Just let me. Here, I'll bring it over.
Yeah, I don't know how to use this stuff. So I am like my parents. And then I'm like, how do you do this stuff? So thank you guys for handling all this stuff.
Yeah, I'll post it in the.
It's just funny because like I posted this, and not many people know about this, and so it's like what the hell? How did this guy get a job, right?
Yeah, that was the Bear Stearns CEO, I believe.
Lehman. Yeah, let me show you.
Oh, Lehman CEO. Yeah,
it's even worse. Lehman was the biggest bank failure. Yeah,
it is.
Yeah, I posted it in the Twitter comments.
Perfect.
Oh, you can't show it on the screen?
I don't think so.
No.
Yeah. So, anyways, it's ironic that one of the C-level executives at Silicon Valley was the old CFO for Lehman Brothers, guys.
Yeah.
How crazy is that, right? So they were recycling. So you would expect he would learn something. So what happened was this, guys. So interest rates were at 0% or really cheap for a long time, right? And so during that time, the Feds did what they did to do to boost the economy. I'm not going to get into politics, but in my opinion, it was for elections, all that, which is obviously true. And so I'm not picking any sides, but this is how the game works. During the times of voting, you want the best economy so that voters vote for you. And so that's exactly what happened. So the Feds pump the markets up. And so they're printing money left and right to do whatever programs they want to do, right? So remember, interest rate was 0. I think it was, dude, did it even go negative before?
Yeah.
Japan was negative. You know what negative means? It means that the bank is paying, the Fed is paying you money to lend out money that they print. It is to spike up the economy. Okay? 0% means that, hey, I'm a big whale. I have $1 billion, and whoever wants to borrow money from me, I'll give you at 0% interest. Why the hell would anybody do that, right? It just does not make sense. What happens is they were very desperate to pump up the stock market, right? Because of COVID. And so that's why it killed everybody. So during the time of COVID, you would expect logical sense that the stock market would tank during COVID, right? Like COVID, they shut down the economy. How is the stock market keep going up? It's because the Feds were buying the securities, 0%. They're buying the underlying securities, the bonds that push up Apple. And I haven't bought a fucking Apple phone in 2 years, guys. I'm the guy that buys 5 Apple phones for my family every time it gets released. And this time, the economy or whatever, but it doesn't matter. So the point is, the Feds were giving out free money. And so what happens is this. So it was to start. So all the startups. So Silicon Valley Bank is a big bank, one of the biggest banks over here. It's actually Yeah, I think it's like one of the biggest banks in the world, dude. So
Top 20.
yep. And so
Yeah.
Silicon Valley Bank serves Silicon Valley. You know what Silicon Valley is startups for technology, tech startups. So a lot of tech startups go there because that's the famous, they do funding for that. And so what happens is you have all these deposits coming in. So back then, 0% interest rate. So people were just giving the banks money. That's why the VC venture capitalists were starting all these startups. And where they come the money from? They have hella money, dude. Free money. So they're just giving out, loaning out people. So what happens is, so now they have all that money in the bank. And so the guy at the bank, the chief investment officer of the bank, like, whoa, we have freaking excess of billions of dollars. You know what the normal bank does? They give out loans. Your traditional bank gives out loans. They take your money, they hold it, and they give out loans. So it's basically the only time that they will go under is all the loans default, right, guys?
Yeah.
And that's what happened during the Fannie Mae days and all that. We'll talk about that too. And that's going to talk about how you day trade, right? But so the traditional model of a bank is they give out loans. That's how they're not going to fucking take all your money and start putting into Bitcoin. And that's exactly why Bitcoin blew up. Okay, so we'll get into that too. So the traditional banking model is very conservative because the bank is supposed to be conservative. They're holding your money. It's not their money.
Yeah.
It's your money. When you want the money back, you should get the money back.
And there are regulators that are supposed to be backing this and honestly monitoring everything that's going on.
The problem is this. The problem is the fact that everything works until it doesn't, right?
Yeah.
It never fails until it fails. And so what happened was you have all this excess money and they decided to buy bonds with it. They stopped giving out loans. Why would you give out a loan when you make more money in bonds? They're buying like 1.5% where the hell the bonds were at, right? And so the problem is this. They're making money, cool, because the interest rates were zero. And they did not anticipate that the Feds would raise the interest rates so quickly and so much and so sharply. So when the interest rate goes up, the bond values go down. So now they're sitting for, I'll make it up, like 1.5% interest on the yield on the bond.
Yeah, something like that.
And then now it's 5%. They're underwater, dude. So what they needed to do was they got rid of their bonds. I think that I read it, they lost $2 billion. Okay, because when the interest rates go up, what happens? These companies start to need money, and so they start to take money out. And so they saw an influx of people because these companies were laying people off. They didn't have money for payroll and all that, and they started coming to the banks to take more money out. And so now the banks are like, holy crap, it's okay. One company coming to take out $50 million. It's cool. We have billions. But now you multiply in by 200 people coming in at the bank at the same time. So that's why they call it a run for the banks. A run for the bank means that it's a domino effect where everybody gets scared. They start running to the bank to take the money out. And so if a normal society comes, I have a lot of money in the bank, hopefully, right? You guys have some money in the bank. We're not all going to take all our money out at the same time. Yeah. And that is what they're banking on. The fact that they're keeping your money. But it's like life insurance. Not everybody's going to die at the same time, but if everybody dies at the same time, they're going to go bankrupt. How can they pay everybody back, right?
Yeah, exactly.
Same thing with health insurance. I knock on wood, we don't have a serious health issue. But imagine if COVID happened, wipe everybody out.
Yeah,
that's what happened, right? And so if everybody runs to the doctor and has a disease at the same time, they're all going to go bankrupt. Yeah. But the fact that they're playing the 100-year-long game. That's how insurance works. They're betting that only 2% of the population needs this cancer treatment. And everybody else just doesn't even go to get their teeth cleaned, right? And that's how the insurance works. And so the Rutherford Bank, what happened was the interest rate went way up so much, inflation, all this, these startup companies started losing money. And the bank did not have cash reserves. They wasted their money instead of giving out traditional loans or playing it safe. They bought these stupid ass bonds and now they're underwater. They're day trading your money. Yeah. The fuck?
Yeah, that's crazy.
Imagine if you're the bank and I found out you lost all my money because you traded bonds. Yeah. The hell? What the hell you know about trading?
Yeah.
Shouldn't you be putting into a T-bill that's safe? Yeah. But it's too boring. Why would you put a boring T-bill when the bonds are making 5%? So that's what happened. So they basically gambled, guys. They invested your money. regardless of whatever they said, the fiduciary issues was not good. But this is where the problem is, guys. The problem is it doesn't matter who's right or wrong. At the end of the day, who suffers is the people that deposit the money in the bank.
Yeah.
And the problem is this, guys. Nothing happened in 2008. So I was there during 2008. It's called the financial meltdown, which is the mortgage and all that crap. They were making fake income to get loans to get houses and all that shit, right? And so it was a bubble. The bubble popped. And now they're holding a bunch of worthless defaulted loans, trillions of dollars of loans. Not defaulted. Yeah. Imagine I buy a house for $1 million. The house is worth $700,000 because of appreciation, all that bullshit. That it's basically the .com bubble, right? So now I owe $1 million, but the house is only worth $700,000. What are you gonna do, guys? Bye. I'm gonna get back credit. See ya. Yeah. And that's what people did, and that's what the mortgage meltdown happened. All these people defaulted on their fucking loans. So what happens is the same thing with the Silicon Valley Bank. They lost the money, and then when I came back to get my money back, they go, "Oh wait, we'll give you the money, but just kind of chill out, you know." And so they try to do a offering. They try to raise $2.5 billion or something, right? Yeah. And when they did that, they showed their cards. The people are like, "What the fuck?" Yeah, the bank needs to raise money. Whenever someone does an offering in a stock, what happens? They need to raise capital, right? They need to raise money, and you're like, "What happens to all my money? Why do you need money? Yeah. How can you lose your money that I gave you? You are a bank. You are not a trading fund. You are not an investment company. You are a bank." Yeah. So a lot of the people on the street have no idea what a bank does. And in Asia, this is why they don't trust the banks. But that's a different story. So now what happened is one guy starts to get the money out, and then they saw them do the offering, and everybody's like, "Get the money out, get your money out." Shit's happening. So everyone's running to the bank, and it's not the little mom and pops guys that they give a fuck about, to be honest, guys. Most of the money, 95% of the money is over FDIC. That means only 5% are the normal guys. 95% of the money that's in there is all Wall Street money. Yeah. And so Biden loves this shit. Yeah. What's the AOC, right? War on capitalism and all that. But anyways, that's besides the point. But and so what happens is now that the startups, they need payroll, and they go to the bank, and the bank don't have their money. Like, what the fuck? So that's called the bank run for the bank. And then so the regulators stepped in really fast. So they showed their card. They could not raise $2.5 billion, guys. That's what they needed to do to keep, because they lost $2 billion in the bonds or whatever the hell they lost. Yeah, because they're investing it. Yeah. And so now, so I'm painting the scenario why the bank failed. The bank failed because they're never going to say this, but the insiders were greedy. You got my money, and what the fuck you do with it, man? You're not supposed to touch my money. That's because the rules, the regulations were designed so that kind of, it's called fractional banking. Fractional banking is they have a limit that, because they don't anticipate everybody running to the bank to get the money at the same time. So they have their models, whatever it is. But fractional banking doesn't work when you're fucking investing the client's money, right? And day trading that shit. I call it day trading, because anything that's risky, why would, I mean, dude, you know rates are not going to be zero forever. But you know, you wake up and you're like, oh shit happens, right? And so that's what happened. They didn't have enough money because they lost money investing your money or whatever the hell it is in bonds. And then now the people, the companies are going broke. They want to get the money out to pay payroll. And then one guy sees that you're trying to get a loan for $2.5 billion. That's pretty much what financing is, right? That's what offering is, right? You get a loan from the fucking payroll, but no one wants to fucking touch that shit. And so one guy calls another guy, and then next you know, remember, these are big startups, guys. Big startups, not even startups. I posted a list. You know, they're Square. That's huge. It's like, dude, this, you know, Roku. Yeah, you know, you see all these people. Mark Cuban had 8 million. That's nothing. These companies have $250 million in there, right? Like Square has 400 million, whatever the hell they lost, right? And so you imagine they come and they go, I want my money. And so and I'll give you an example, guys. So I went to the bank. This was 1 year ago, and I was there for over 2 hours trying to get out $6,000. You remember that day, guys? $6,000 or $8,000.
Yeah, I remember that day.
I was so mad. I was like, so what they did was sir, do you realize that That's a lot of money. You can people will rob you. What are you using this money for? I'm like, I need my money, dude. It's only $6,000.
Yeah.
You know? And so they're trying to convince me not to take the money out. Because do you know why? They don't have the money.
Yeah, exactly.
Most of the transactions in the world now are all digital. No one carries paper money.
Yeah.
That's how they control you, which is okay too. The conspiracy theories, they want to control you. Bullshit. You don't want to deal with $200, $100 bills. It's because it's like, dude, man, how are you fucking gonna buy a house with $100 bill?
Yeah.
The only people nowadays, to be honest, the only people that nowadays that need thousands of dollars are gamblers, drug dealers, and people that are money laundering, right?
Yeah.
A legit individual is not going to care on a wad unless you're a rapper trying to show off. And rappers, I don't want to get into that, but they're not legit either. Right? And so anybody the government way of handling tax cheats, money laundering, drug criminal activity is to not let you have a physical form of currency because they cannot track you. Let me tell you something. Government's all based around money. Without money, government fails. Defense, right? We were shipping tons of billions of dollars to Ukraine. Money talks, bro.
Yeah.
And so they would never. So people that talk about Bitcoin being the next bullshit, the government would never let that happen. And so right now, so you see what's fucking funny, dude? Crypto's dead. And the guys that say, "Oh, see, the banks are dead. I knew I'd have all my money in fucking Bitcoin. I want to get Bitcoin out. What do? I need to transfer that shit to US dollars."
Exactly.
And now the peg, what's that? USDC is under. It's like, what is that now, guys? Look it up. Crypto might go to zero soon too. It's unpegged, right?
Yeah, USDC just unpegged that stable coin that the bank was involved in, or something like that.
Dude, it's crazy, right, guys? So basically, the government controls the money supply because of the fact that that's all the government does, man. Money controls everything. And so it's not a bad thing. It's digital. They're controlled by the government. It's not a bad thing. I love the fact that they control it because you know why? I'm not doing anything illegal. I'm not doing anything illegal. Why the fuck do I care about Bitcoin? I'm not here smuggling fucking drug money or cartel money. That's how they fund criminal activity, guys. Through fucking anonymous crypto. How do you think people fucking pay for nuclear bombs in Russia? They're not doing a wire transfer through Citibank. They're not carrying a pile. And that's why the US dollar only caps at $100, guys. It's very difficult. Think about it. $100 has been around forever. Inflation now, $100 barely bought me. I went to dim sum today, cost me $220.
Yeah.
But in Europe, what's the biggest denomination in euro? Is it 500?
I think it's 500, right?
Yeah, I think so. I don't think they have $1,000 bill.
Yeah, that's pretty huge, guys.
Yeah.
That's pretty huge. So what they do is they money launder through crypto and then assets like diamonds and not even diamonds arbitrary, like gold, but gold's heavy. But they do you know what they do in cars, collectibles like art, NFTs and all that. We won't get to that, but so I'm stating a case where do not get into this conspiracy theory where you think the banks are bad. The banks are not bad, guys. The banks are good. If you had lost, if US look at Celsius, look at FTX, they don't have FDIC.
Yeah.
You know, the F stands for you're fucked. Fuck dick.
What do you think about a central bank digital
currency? Give me 2
currency?
minutes on this. So the banks are good because you know what? Your money's safe, guys. 5%. The normal people like us. FDIC used to be $100,000. Now it's $250,000. So that means a normal individual, a normal working individual, don't have $250,000 in the bank. But if they do, it's covered up to $250,000. I sleep at night, rob my bank. I don't give a damn. It's insured by the U.S. government. And, you trust the government? I trust a guy that has a nuclear bomb.
Yeah.
You're going to fucking fight them with a nuclear bomb? So who has the biggest weapons wins? So FDIC stepped in and said on Monday, the people have their money up to $250,000. Us normal people, you know who loses? These startups, these greedy motherfuckers. And you know why? They're all in bed with the regulators. They're all in bed with the bank president, CEO. And so what happens in 2008, they didn't learn their lesson. Okay, so they raised it to 200, but the problem is this. The problem is, so I'll get into okay, I'll stop here. I'll take questions, guys. We'll stop here right now. Any questions from the panel, from the comments?
I just thought, what do you think about like a central bank digital currency? Like if they tried to make their own crypto in the States,
They're already
did you hear
working.
anything about that conspiracy?
No, they already have a pilot program in New York for its own digital currency. I know someone who works for the Federal Reserve of Boston who they're working on it here as well. It's going to happen. I mean, I even noticed, I don't know if you guys notice in your everyday life, that cash is just becoming slowly and slowly less involved. You know?
Okay, let me tell you, what the fuck is crypto? It's a digital fucking currency, right?
Yep.
We have that. Fucking PayPal, Venmo, Zelle, the fuck, Apple Pay. We have that already, dude.
But there's been rumors going around that like, yeah, and this is just strictly
the eventually what this is the good thing about the only thing crypto is it's the blockchain. It's a currency on blockchain. That's it. So when you talk about crypto, it's not crypto they want. It's blockchain. But the government has blockchains in terms of wire transfer. They just basically they want to connect the dots, right? Paper trail. And so the government having their own digital currency, crypto, blockchain, who gives a fuck? Doesn't change anything that we live in. It makes our life easier. It makes money laundering harder. It makes criminal activity harder. The normal people, I don't give a fuck. Do you care? You're doing a draw or transfer already. You got a bank card. Everywhere you fucking go, you have this thing is fucking funny. We have a phone. The phone, even though it was off, can still listen to us. There's a GPS in here that they can track you around the world. And you're worried about crypto and they're talking and most of these guys got $2 in the bank. They got what? Fucking one Dogecoin. Okay. And so they have so it's only the criminals guys or the fucking guys that have no clue what's going on that's worried. I'm not worried. What I love about the government is this. You know me, man. I hate these big things, but what I love is the fact that I know my money's fucking safe. I put my money under the mattress. Someone's gonna rob me. I put it in jewelry. I'm gonna get robbed when I walk to the store. I'm gonna give it to my local loan shark or my, where are you gonna put your money, dummy? You're gonna put it to FTX. You're gonna put it into Mount Gox. You're gonna put it into a fucking crypto bank that is not insured.
I want to buy some Meta real estate.
You see? So all those companies are not insured. So this is the problem. The problem is the banking system works. It's just the greedy motherfuckers that in there that are don't think about the worst case scenarios. So yeah. I've thought about this guy. So any questions before I move on? Because this happened to me before.
One of the questions that was asked a few times is how do you think this bank collapse is going to affect the average person? So just like,
and I just said that the average person sleep at night no more. If you have more than $250,000 in there, you will lose it. The average person do not have $250,000 in their fucking checking account, right? If you have more than $250,000, I don't feel sorry for your ass. You're a greedy motherfucker, right? Oh, I'm making all this free money. So during the crypto days, the crypto banks told everybody to put the money into the crypto bank instead of putting it into Citibank, right? Because the crypto banks were making 17%, 12%, 17%, 20%, sometimes even 25%, right?
You could stake it for like 20%.
Where are they getting all that money from? And the moment that crypto stops going up, interest rates go down, blew the fuck up. Guys got millions of dollars of Bitcoin gone. Calling the government, help me. I just got ripped off. And those are the same guys that go, fuck the government. I hate the government. I'm going to decentralize this shit. I don't trust the system. And now when you go off on your own and this decentralized bullshit scams you, you call the police. Defund the police. And then someone breaks in your house. Please come now. Please come now. I just defunded the police and all these criminals are trying to rob my Bitcoin. They took my Bitcoin. Okay? So be careful what you ask for. I don't believe in that bullshit, decentralized bullshit, because at the end of the day, they will fuck you up. They will let you die. They let the government laughing at all the crypto bank failures.
Yeah.
They're prosecuting FTX.
They're not.
They're
FTX.
not. They're not helping the depositors of help FTX. Are they? They're just saying, ha 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 ha.
Yeah, for real.
So you want it decentralized? You got it. You are afraid of big government? You got it. Now what?
Yeah.
Are you insured? Your whole point was you don't trust the government. You took your money out of the bank to put it into some scam bank that has no insurance, and now you're crying the government for regulation? I thought you didn't want regulation. So what happens to the little guy? Nothing. We laugh. Woo! Woo! Fuck you, dumbasses. The little guys that trust the government got their money back. On Monday morning, FDIC is working today to make whole every FDIC insured customer. But FDIC only goes up to $250,000. That's still better than $100,000 when I grew up. When I was trading back then, it was $100,000. But we'll talk about that in a little bit.
So, Val, one of the other questions that popped up is, do you think that this is going to affect the rate hikes from Jerome Powell at this point?
Let me tell you something. You remember last week, Powell said, we still got 2 million people left to be unemployed.
Talking to Elizabeth Warren, they were in the spat, right?
Yes. Elizabeth Warren, you understand those are humans. Yes, I do, but we need to, because we need to stop inflation. So the Fed is doing exactly what is intended.
Yeah.
They raise rates. The smart people at the bank should understand how that works. But these smart people are what? Ex-Lehman Brother motherfuckers. And you know why they do that, guys? No one went to jail. 2008, no single person went to jail.
Yeah.
Billions and trillions. If you walked into a bank, stole $20 from the bank, you are in for 20 years.
Yeah.
When you rob $100 from the bank, you're in jail for 100 years. When the bank robs you of $1 billion, I need more training, guys. My bad. I didn't know.
Yeah.
So they said, you see, Wells Fargo, remember Wells Fargo making a lot of fake accounts and stole money from people? No one went to jail. What we do is we realize there's a problem. We will train our people better. You're the motherfuckers that told them to steal people so that you can make fake reports for your 10Q so your stock don't tank. The system is broken because it's broken by design. Because the people that designed it, they don't give a fuck. Because who's going to bail everybody out? We are. Our tax dollars. They made so much money. Pull up what we posted, how much the insiders sold hours, days before this collapse.
The CEO sold, I think it was $3.2 million worth of stock.
So I posted all, dude, pull it up. Dude, it's not just the CEO, the insiders. So let me pull up, can someone post what I posted in MIC?
Did you post that on Twitter, Bell?
Yeah, I'm going to retweet this so you see all this stuff, guys. I mean, dude,
I just put it in the comments.
MIC, I told them, okay, let's go through what was posted in here. Here, guys. So read this. I don't know how. So if you want to see it, go to my Twitter, _rock.
Harry actually posted it in the comments. You can click on that link right there.
So I posted with it. I people in MIC was asking me that day, should I buy it? Will it go up? And I'm going to read exactly what's happened. This was like half an hour before it halted, guys. So I want to read. I was like, SFB is at $40 right now. Okay, no, it's about to go bankrupt and get halt, and you will lose it all. And it went from $40 to 34 or something like that.
Yep.
And people are like, oh yeah, we're buying shit. So what I said, dude, don't touch this shit. It's gonna halt. It sure never halt. But not only that, I repeated. I said, remember this, guys. Lots have insider information. Only bad news are coming, in my opinion. They are selling everything they own. Look at this charts, right? And filings came out later that the CEO and the insider sold all this shit, right? We shall see, but you don't think they know what will happen? Bankruptcy. That's why they're fucking selling this shit. You don't think a bank of that magnitude, the guys inside knew that they had liquidity issues a month before this happened.
Yeah.
Same thing at Lehman Brothers. Remember all those movies we saw?
Yep.
They were inside with the fucking SEC, with fucking the treasurer, trying to get bailouts and all that. You don't think they know each other?
Yeah.
I didn't know this shit's going to happen, but I just sold all my stock. It was just a coincidence.
Yeah.
Oh, I'm just trying. You don't think a CEO knew this shit months ago? Go watch what happened in 2008. What are those movies that the documentaries? It's all about that, right?
The Big Short's a good one.
Yup. They are in there for months trying to figure out, should we let it fail? Is it a systemic issue? Is it going to cause anything else? Dude, they're fucking, it's just mind-blowing. They're playing with people's fucking livelihoods.
Yeah.
And you know what? They made money. You see any clawback? Usually there's a clawback, right? Like when what's that guy? The biggest swindler guy.
Bernie Madoff.
When they caught Bernie Madoff, they made everybody that profited give back the money.
Even old people, like old grandma and grandpas that made money. I just watched that documentary on Netflix. It was I think it was on Netflix. Actually, it's fantastic. But the CEO of this bank, he did this video from one of the most exclusive high-end golf resorts in the world in Scotland, while he just cashed out $3.2 million.
He's wearing a fucking Scotland rich people fucking shit. Okay, we'll talk about. But so basically, what I say. So the problem is happening to this, guys. No one's held accountable. Everyone says, well, it's a system failure. My bad. No one went to prison, so nothing changed. These guys made out like bandits, right? They made money, billions of dollars, or whatever the fuck they made, right? And then what? You really think they give a fuck about you? Because you know why, guys? They know that FDIC will save the little guys. As long as we save the little guys not gonna say anything. The little guys, they're gonna blame it on the big guys, right? The big corporate monsters.
Yeah.
And so now you see the monsters are the little guys got all their money back because FDIC is $250,000, guys. So as long as you got your money back, you're not gonna fucking say shit, right? The system works. I love this system. It's the people that lost are the rich guys. Ha ha ha! I love it. I love it. And so the cycle repeats because no one's going to go to prison because the system's designed for greed. Because this never happens, right, guys? It's called a black swan, but as a trader, we know black swans happen all the time.
Yeah.
But of this happens a lot, guys. I'm pretty damn sure, but it's so small or they put on the rug. It's just this one was so big, and it happened so unexpectedly.
Yeah. Well, there's another one that closed. Signature Bank.
Dude, there's a lot of these banks that close, and I don't know the reason why they closed, but if me and you ran a bank, and the feds were giving us 0% to loan out, I would fucking loan out all day long.
Yeah,
I'll make less money, but I would live not worried about hurting people. I would have a business for 1,000 years, or you can get rich quick, like in our industry, right, guys? Do the pump and dumps, like those guys.
Yeah.
Make millions of dollars in a year, go to prison.
Yeah, that was
the
insane.
fact that the fact that they go to prison, no one's going to do it again. But in the investment banking industry, that's just investment banking. I make my $1 billion, my bad. On to the next motherfucker. And so the little guys like us should not worry. This is where you should worry. Okay, so I'm going to stop for any questions, and then I'll segue this from banking into trading. This is why we call it this. Okay, so any questions so far, guys? You guys understand banks are good because of insurance. So let me finish this thing about the bank insurance. Cash, who the hell can get insured billions of cash? You can't, because someone can steal the money and say, ooh. And so what happens is a lot of things are non-insurable. So the things that if they're buying these bonds, but they're losing. At least they're losing. They did it on their own, right? No one stole from them.
Yeah.
What happened is they lost $2 billion of your money. That's the problem. And so the money that they're playing with is not their own money. Is and then what happens is this: that it costs a lot of money to run a big operation like that. So they have their own operating costs and all that. So when you add all this thing, and then when the money stops and everyone's running for the bank, you have no choice but to shut down the bank. So what's going to happen is this, guys. So I'm going to finish up real quick on the bank. They're going to try to clear out all the assets and then sell whatever is left and see what left. And they'll pay a percentage to whoever's over FDIC. So I think on Monday they're going to give you some sort of multiplier, some percentage. They're trying to figure out what is left to sell at the bank. And so it's very rare, but the system works. The regulators stepped up freaking fast. They halted the stock so no people can lose. So you're gonna wake up on Monday. Let's get a guess. How much do you think the stock is gonna be on Monday?
Oh man.
Oh man, I think I don't know, $10, $5. Or do you think lower? People are saying like OTC type shit.
Yeah. It may not even open, guys. I don't know. Let me take a look at the halt. So we'll get to it. So this is a good segue to that, okay? So if you're a big wig and you have money at the bank because you have so I have businesses, guys, and I have accounts over $250,000. So there's a big wake up call for me too. I deal my money not in these banks that I do traditional banking. So the number one, guys, if you want to save yourself, don't put your money into these high-flying banks that try to give you the best interest because they are investing your money. Fuck, 1% ain't gonna fucking change my life, guys. But losing 100% of my money will fuck me up. So what you do is you go back to a traditional bank. Don't be scared. So I'll give you advice on how insurance works. FDIC is $250,000. So if you have $1 million, what you do is you need to open 4 separate banks. People talk about sub accounts, all that doesn't work. You know why? Because it's not by the account, it's by the category. Checking, stock, whatever. They have categories that says you're limited to $250,000 per category. Okay, and so what you need to do is find. So back in the day when I traded huge size, I had I had like a few. Dude, I had every account on the street, every broker, because FDIC only covered up to 100,000, whatever, right? And so we'll segue into that, but I'm talking about the banks now. So what you do is this, guys. If you're a normal guy that has less than 250,000, don't worry about it. Put it all in one bank. Who gives a fuck? It's all FDIC. Make sure it's FDIC approved. That's it. And you can find out by Googling online. Okay. But I have my money at Citibank, whatever. It doesn't matter where it is. I used to have every fucking bank because the fear is, even though it's insured, guys, it may take time for you to get your money back. And you see my heartache over 2 hours. I had to call the branch manager. The branch manager had to call someone else just to get $6,000 out. They did not want to get me $6,000. They were trying to size me up. They were trying to convince me not to get it. They told me to come back the next. I'm like, $6,000. And I'm like, that's a lot of money. I'm like, I don't want to think about it, but that's my locate fees. Big for some, but it's like, it's your money, right? And so what you do is this, guys, you spread money around. The key is, why have all your eggs in one basket? Spread your money around for a bank. So I'll give you an example. If your bank ATM limit is $500, have a savings account and a checking account. Now you have $1,000. And you have a couple banks, and now you can go around. But they do that on purpose. You want to get robbed and held, and then they take you to the ATM and they withdraw $100,000, right? So that's why it helps you. But the key is, if you're a traditional banker, if you do traditional banking, guys, find a traditional bank. But even if you don't find a traditional bank, it's okay. Most of you guys probably don't have $250,000 in cash just laying around, just chilling in the bank, right? But if you do have more, split it up, different banks. Now you know $250,000 is the limit. If you have $250 million, DM me. I will help you. Try to figure out how to. So I'll stop there, and I'll segue into stock market and stock brokerages. And this is why we're here. We are day traders, and so I want to tell you how to save your money in case a stock brokerage goes down, because the stock broker is the same thing as a bank. So I'm going to stop there. Any questions so far, guys? Does that make sense? I mean, does that kind of clear up? And because I want to calm everybody out. This is fine. I just love it. It's like popcorn. Get popcorn out. This is going to be the next American Greed or a new Netflix documentary series.
Yeah.
And this is going to be good, guys. The next segment, take a breath, go take a piss, drink some soda, what you need to drink, because we're going to talk about stocks and how you can make money when the stock market opens.
Funny enough, futures are ripping right now. I think people tend to think that we've actually nipped it in the bud somehow.
So I mean, the futures are weird. I don't know. It's the fact the FDIC moved in quick, right? So they moved in quick, and they said, "I'm going to make everybody whole," and then they acted very quick. Versus if you delay it, and the uncertainty is what kills the market, right? Uncertainty, like. So did the VIX go up or down? Is it the VIX? Is there a VIX, like a 24-hour VIX?
There isn't. I don't think so. But the VIX spiked on Thursday and Friday. And
Correct. So now it should. So people probably long the VIX overnight, but now it's going to drop down because the markets are rebounding, right? So the markets did exactly opposite of what people thought. That's because you know what, man? Fear, the height of fear and panic is usually signal the bottom. When you see people lining on the streets, remember Greece and all that crap? People fucking running into the banks and all that. Yeah. When you see people lining up on a Sunday trying to get their money out, it's like word's out. So the bottom might be near. So if you're shorting when you see people on the street, you're too late, dude. You should be shorting when you saw this guy, insider guy, sweating and selling his stocks, right? And so the people that are shorting at $40, to be honest, the stock is going to tank.
Yeah. So VIX futures are crashing from 27 to 23 right now.
There we go. Exactly what I said. The VIX, it's the fear index. So right now, people are, whoo, I got my money back, right? People are afraid that the government don't have enough money to give them back or delays, right? But the fact that on Monday you got your money, bro. Go get your $25 that you have in your checking account. Go ahead. You're cool. Yeah. And so, but that doesn't solve the situation. So exactly what I told someone, I was like, you know what's going to happen? It's going to create it out and it's going to bounce. And so after this, so if you want to start, I would start talking about stocks right now. And I want to give you a game plan because this is how I made money in Fannie Mae. So how do you protect yourself in banks? You know, the FDIC, federal insurance, is $250,000. Same thing with stocks. If you have a stock trading account and it's under $250,000, nothing to fear about. Nothing to fear. The only fear is don't put yourself into some weird ass, non-traditional brokerage. Like, what's that? That freaking Israeli, the neck guy. Remember that neck guy? TradeNet. I don't want to say it. But anyways, there's a lot of weird ass companies that try to circumvent pattern day trading rule. And so you get into these weird situations where you're trading a sub account of some other sub account, some guy's account. The first question you got to ask your broker, I'm telling you this is an exercise for you to protect yourself. First of all, if you have under $250,000, don't worry. If you're with a traditional broker, you can look up Google. They have a list that is the broker licensed. Because if it's licensed, all that, you have FDIC insurance. But if I create a new fucking brokerage, like a Bow brokerage, look it up. You can look up this Bow brokerage exists. But if it's a normal brokerage, guys, which most that we do, it's insurance. So you don't have to worry, guys. Don't be panicking and try taking money out. You should panic only if you have over $250,000. Because if the brokerage did what it happened, guys. Because what happened is this: your money should be segregated, right? Segregated funds. So the broker is supposed to take your money. So that the broker doesn't really have your money. It's the clearing firm that has your money. The broker is the middleman. The broker is the cashier at fucking Whole Foods, right? He's just fucking doing his shit. Yeah. He doesn't hold your money. So who holds your money is the clearing firm. So you have to be very careful. If you have $1 million, okay. So I had many millions back in the day in a few trading accounts, but every week I asked them. So what happens is this is the secret, guys. So Success Trader. The reason I went to Success Trader because the parent company is Regal. Regal it's a $1 billion public. I think a public company. It's been around for years, 30 years or something like that. It's $1 billion, and I've been trading them as a private trader. So during the Fannie Mae days and all that stuff, right? I have a bunch of brokers. One of them, they have so I asked them this because I have $5 million in there, right? And so I'm like, where you only short federal FDIC was only $100,000, and I'm like, I'm not gonna open up fucking where can I find that many brokers, right? So what they do is they have what's called an insurance rider. It's an insurance policy over FDIC. And so Success Trader has a $25-30 million rider through Lloyd's of London. Others are through AIG. And that's why back in the day when they say too big to fail, AIG was insuring everybody. So they had to bail out AIG. If they did not bail out AIG, the whole system is systemic. That's why it's too big to fail. It's because one insurance guy was securing everybody and all that crap. But I think I told you guys this. If you take a look at U.S. treasurers, they're all ex-Goldman Sachs CEOs.
Yeah.
So you see how the system works, guys. It works by design. Goldman Sachs CEO, all those are the. Let me take a look. You can go. Someone Google this for me while I talk. Harry James, look at U.S. Treasurers, and then Goldman Sachs. So that's why they call it the evil empire. So during the 2008 bailout and all that shit, AIG got bailed out. The only like one of the people that got bailed out whole, like dollar for dollar, was Goldman Sachs. They should be getting 50%, 30%, like everybody else, right? The government bailed out, everybody takes a hit. At least you don't go to zero. Goldman Sachs got bailed 100%. Why? What? But anyways, we won't get into that. But the system is by design. Don't hate it. This system makes the people that are informed. That's why you join MIC. You're informed. That's why you're here on this podcast webinar. How many people are here, James?
We have like
300 and so.
That's good. That's 300 people. That's more educated. And then we will keep playing this. But so now you know how to protect yourself. If you have $1 million, guys, you ask your broker, do you have an additional rider, insurance to cover that? Okay. I've had so I talked to the CEO of Success Trader yesterday. He's going to come out with a letter to ensure everybody that their money's safe. Because this is I've done this back in the day, guys. When it fell, I was scared too. And so every fucking time I'm asking, how do you insure all my cash? So there's a couple ways they insure my cash back in the day. No one can insure cash much because it's fraud. There's too much fraud on cash. But they will secure assets. So if you have $30 million in cash, they may not. They may go up to $10 million. I don't know what it is. You need to ask, okay? Because but that's why that's why you buy, let's say, an index fund or something stable, because an asset like stocks is insured up to like hundreds of millions. Because like they insured not because you're gonna lose money. They insure like something that someone steals, like the crypto fucking banks, right? They fucking stole your crypto, right? They disappeared, right? So they insure it from theft and criminal activity. So cash, if you have too much cash out, it's like this. It happens, but stock it's hard because like, dude, how you're gonna get my $10 million worth of my Apple stock? You can't get that shit, right? It's very difficult, right? But cash I can steal. So anyways, so they have additional riders over there. It's called insurance. And so I'm going to get for Success Trader clients, I'm going to get out a letter from the CEO that will tell exactly what the limits are, guys. And you guys are all protected. So the only people that should be scared are the people that have too much money.
Yeah.
But you have too much money. This is your wake up call, guys.
Val, you're saying that not all brokers.
Trade Zero too, guys. Trade Zero is good. We work with Trade Zero. They're U.S. Brokers. They are FDIC insured. Same exact thing.
Yeah. Yeah. As long as it's not some sketchy, like you were talking about, the long neck brokerage, as long as it's not some sketchy ass
overseas,
yeah,
a weird ass shit. That's a saving different, but don't be afraid of what happened to Silicon. You're completely fine. Okay, you're completely fine as a normal trader. You're completely fine. Let me see what else. Okay, any questions there, guys? Any questions on brokers? I'll stop on brokers before I talk about trading. And trading is going to be cool. I'm gonna give a game plan on how I see you guys making money on these bank failures. But any questions on? So we talked about banking. Okay, so you understand. Okay, if you have more than $250,000 in your bank, you're screwed. Go find another bank and put it in. If you have $10 million, you gotta find a lot of banks, or you put into an asset. You don't need all that cash. So what happened is those that have more than millions of dollars in cash, they want to make 5%. So Success Trader, I just talked to the CEO. Success Trader has T-bills. special program with the treasury bills. Okay, those are insured, obviously, right? So U.S. treasury bills, they give you 5% annualized interest. So you can park your money instead of parking your money into the bank and not getting FDIC. They should have parked it into treasury bills and put it into Success Trader. And you get 98% or something. He said that you can trade off of it. So that money is parked, it's safe, and you can trade off of it.
So Bal, one of the
guys that have over $1 million, DM me on Twitter or just talk about it, and I'll tell you. I'll let you talk to the CEO of Success Trader, because that's how you get protected, guys. You have to understand. Most people never anticipate bank failures, but I've been through. You know what I've been through, guys. I've been through 9/11. I may look young and hot and fresh, but I'm an old man, right? I've went through a lot of crap. I lived in New York City, 1 mile, downtown New York, 1 mile from 9/11 when it happened. I was day trading when it happened. They shut down the markets. And then the stock halted and everything. And I lived 1 mile from that. The great blizzard of New York City, the Northwest blizzard. I remember you've been there, dude. It's like fucking blizzard that blew out everything. I was there too. The blackout, dude. I think I'm a fucking magnet for disasters, dude.
Follows you wherever you go.
Everywhere I go, bro. I'm telling you, man. I lived through every freaking crazy disaster of the past. I'm an old man, like many decades, right? So
one of the questions, I know James is going to mention this one too. One of the questions is, do you think Roku or Square are going to have to file for bankruptcy, or do you think that they're going to have to raise money?
So the government is going to help because they don't want to cause a systemic fear. What they're going to do is they are going. So I heard that they're going to, because it's not going to go to zero. The bank has assets. They stepped in very quickly before that they can try to hide the money and do whatever they need to do, right? So the bank took possession of the bank. That's pretty fucking crazy, right? So the government took possession of the bank. And so they're going to, so who that we don't really know, because we don't know what the assets left of SIVB, you know? And so the government's going to figure that out, and then they're going to give them emergency money or where the fuck it may be. Because to be honest, if you have $250 million, you don't need all $250 million. You just need to make payroll.
Yeah.
And that's usually what it is. So the fear was, fuck, they're going to lose all my money. I got to take all of it out, which is true. Because they have $250 million. So what they do is they'll take out $250 million, $250 million minus $250,000. Right? So for us normal people, it's fine. For the Roku guys, I'm pretty sure they're working with the government to figure out what the ratio is, that they can get access for funds. And to be honest, I guess now they're going to go back to traditional model of getting loans. So Roku's going to get a loan.
Do you think they've stopped this before it turns into like a 2008 like type of financial crisis? Did they step?
2008 was systemic, meaning like you do not bail out AIG, it will take out and bankrupt others. So this is kind of systemic, but systemic in what magnitude? The bank has how much under deposit? Can someone look up? So they have, most of these are startups, guys, right? Apple is not there. Silicon Valley Bank is a bank for startups. They have a lot. So the systemic is for. Someone said that it put Silicon Valley back 10 years of innovation. Because a lot of these companies will get wiped out, but they're too small to care about. So there's too big to fail and too small to care. You see? So these companies are too small to care.
So do you think there'll be a lot of startups not being able to make payroll or just slowly kind of shutting down?
There's a lot of startups going to get wiped out. They simply don't have the funding. They lost the money. So I'm a VC venture capitalist, right? I gave you $25 million to do your startup. You put that shit into Silicon Valley Bank. Wake up, it's gone. You're done. Sorry, you're done. Bye-bye. That's why these guys, the systemic is not, there's multiple layers of systemic, right? They don't really give a damn if 50 startups die. But they will care if AIG doesn't insure all your mortgages, right? So Fannie Mae and all that fucking shit, right? We'll talk about trading a little bit, but systemic is a big magnitude or bigger than one bank. Lehman was systemic, it's because I think they had so much derivatives or whatever. I don't remember, but they were tied to everything else too. It's not just one bank going down. So Silicon Valley Bank, yes, they had a lot of clients. But tell me how much is under a deposit. Google that real quick. How much under deposit is SVB? And you'll see the magnitude of the thing.
SVB had 209 billion of total assets and about 175.4 billion in total deposits as of December 31st, 2022.
So take 95% of that. So basically 150 billion. How much was the mortgage exposure? Trillions, right? So it depends on who dies that they consider systemic. This is like, okay, we're gonna step in and save the little guys. That's fine. But if the little guys go down, then they're gonna get reelected. So I think there's a lot of political. It's gonna be a lot of political thing too tied to this. Because, like, dude, I don't want to say anything, but Biden's still how many billions now to Ukraine?
Yeah.
And they're like, oh, fuck, let the bank fail. That's why I made a joke, guys. People hate this joke, but I said, let me tweet the joke. You want to tweet, put that into the comment section? I was like, Silicon Valley Bank is breaking. Silicon Valley Bank changes its name to Ukraine Valley Bank to get funding from the government. To get bailed out.
It's gonna have a little YouTube tag on it that says, like, "Do not watch."
Yeah. You see, so when you see this and you're unaffected, meaning like you don't have money in there, you get sad, or you're like, "That's the system, dude." I'm not sad. What I'm sad about is if they don't make regulation changes. They need to keep more of your fucking cash available for you to take out. That's what I want. They need to change the percentage of fractional banking. And they need to separate. Remember when JP Morgan bought Chase? They had a trading firm, investment firm, and a traditional bank. And they're like, what the fuck? They need to segregate that money. You can't be taking money from me and you and my mom and giving it to JP Morgan of fucking like trade derivatives and whatever the fuck they're doing, right, guys? They need to segregate your funds. So the fact that happened, an investment bank is different than a traditional a savings bank. They're an investment bank. That's not a fucking bank. They just call that shit. Banking is not banking. They made a different type of banking, right? And so the fact that happened, guys, you already knew that this shit's gonna happen again. JP Morgan now merges with Chase. JP Morgan is what? They don't fucking take deposits. They're fucking using that money to fucking day trade.
Yeah.
To do deals, to do whatever they do. So the fact that happened and then it took this long 10 years. When was the merger, dude? Let's see. When was merger JP and Chase? 2004. Jesus, that's before the 2008. You see, so man, they didn't learn shit. They didn't learn shit. They combined fucking investment banking with traditional banking, and this is what fucking happens, dude. Same fucking shit. Silicon Valley Bank took your money and lost on bonds, and now they went under.
Off now to like bigger banks like JP Morgan and like Bank of America. Do you think that people are going to be scared keeping their money, even the little guys, keeping their money at a?
That's why the meme. Did I post the meme? Remember the meme with the grim? Hey, post that too. I'm gonna tweet that too. Good point. Good fucking point. I'm gonna post that. This is funny. You see, all this shit ties in, man. I'm glad that you guys see all this. So Jim Cramer came out with a tweet that says JP Morgan is a fortress. A fortress of what?
I personally think so. Now I'm terrified.
So
yeah, I'm actually terrified of that tweet.
So James, you hit the nail on the head, dude. FTX with investing, right? They're trading clients' funds, right? And now SVB and now JP Morgan Chase. And so, what was the price of fucking JPM? Let's look at the fucking. To be honest, I don't trade this stuff, guys. I don't really give a fuck. I think we'll talk about trading after this, but but this is very interesting. Those that do, I'm gonna give you a game plan on how you can fucking like make money like I did on Femi Man. JPM. Let's see if JPM went up or down. Can you tell me?
Just in, by the way, Coinbase holds 240 million in Signature Bank, which has collapsed just over an hour ago. That's
Oh,
the latest
shit.
one.
Yeah, that's another thing too. Coinbase. Oh wait, say that again, James. Repeat that again.
Coinbase holds 240 million in the latest bank that just collapsed about an hour ago.
Jesus. Coinbase. So Coinbase is gonna go. Wait, So Coinbase put their money in there.
Yeah, they had 240 million in which bank was that just collapsed? The New York Bank.
Coinbase is fucked.
That's a lot of money.
Signature?
Signature Bank. Yep, 240 million and now collapsed Signature Bank.
Oh my! So what's the Coinbase tank on Friday?
Well, they just got closed now.
Yeah,
just got closed.
Signature Bank just closed today.
Signature Bank, a public company.
Signature Bank is not, I don't believe.
So this is a very good. So Coinbase did tank on Friday.
Signature Bank is SBNY.
Yeah, it is.
SBNY. SB?
SBNY. It's down 22% on Friday.
Yeah, it did tank. So Coinbase tanked because of that, and now they close. Oh fuck! You see,
the scary thing is Coinbase tanked before news came out that SBNY was closing and being shut down by regulators. So what is that going to do to a public company like Coinbase, who is called crypto backed? I mean, they're public and it's huge in the crypto space.
Guys, did you guys just hear what I just said to you guys earlier about these crypto motherfuckers?
That's it. Yeah, this is like a nice whirl right back.
I didn't even know about this, guys. You see, and then all of a sudden the tweet that that Kramer posted makes sense to you, right? That's why people are scared shitless. Because every bank that is trading your money is exposed to interest rates fluctuations like that, and these banks they're moving billions of dollars, guys. They don't just buy they don't buy GNS stock, right? they just want to make their few percent points and off of billions. That's a lot of money, right? Even make a 1%, 1.5% on billions of dollars, a lot of money. And so now, these guys are all fucking trading your fucking money, and that's not cool, man. That's why I think credit unions are better sometimes. So if you want to be safe, research credit unions. Their fees are lower and all that. You really don't need a traditional big bank, guys, unless you want to do loans and all that. I think credit unions have loans into too. So this is a good wake up call, guys, for everybody to audit where they put their money, who they trust their livelihood to. Sometimes we take it for granted because to be honest, it doesn't happen often. And when it happens, guys, me and you are safe. We're not billionaires. I don't have fucking 50 million sitting around. If I did, I put it in real estate, which I do. So, I'll talk about that in a little bit too. But all these companies that are greedy, they're greedy for a reason because it works. It works all the time. It works all the time. They just need a little loan to get out their little problem. Make sense? And so, same thing with Tesla, guys. Remember? Tesla just needed a little loan. They got a $50 million loan, which prevented them from going bankruptcy. And now they went from near bankruptcy. They were literally hours from bankruptcy. They got $50 million loan. Then they went, because of that, they didn't go bankrupt. They became $1 trillion company. So if these banks had $2.5 billion, a loan shark gave it to them for a few hours, a few days, a few weeks, they would get out of this jam. But if you don't have that money, you must sell your assets. You see? An asset is a bond. It's all that stuff as well.
Bitcoin futures are up 10%, even with Signature Bank going down. That doesn't.
You know why Bitcoin's up? You know why Bitcoin's up? Because it's the run for the banks. People think that decentralized are the bank. They don't trust the banks. It's not because of this shit. It's because, in my opinion, this is my opinion. Obviously, people are idiots. They don't understand. They think that the banks are safe. The banks are not safe, dumbass. It's safe. It's safer than your fucking crypto. You put that Coinbase, you put that money in your Coinbase and see what the fuck happens on Monday. I don't think they can. Coinbase says that they can't take money out, right? They put up something that said they can't take money out because of the U.S. dollar.
Yeah, there was a lack of withdrawals, I believe, when USDC got depegged. Now Bitcoin is squeezing. This is awesome. It's almost like they're listening to us.
Yeah. So what you guys do is this, guys. So we're all protected, guys. Don't be afraid. I'm glad that you guys came along. How many people still left with us on the podcast, guys?
303.
That's not bad. So don't worry. So let's talk about the next step. Let's so I don't
Trading.
Trading. How do you make money? How do you make money? You make money when, like Warren Buffett says, guys, you buy when there's fear, right? When people are selling, which is true. So what happens is this: people think that these stocks go to zero overnight. The company is bankrupt; it goes to zero. So they go all in on the short, and that's how they get squeezed. Bankruptcy takes years. It won't go to zero. But new traders, oh shit, it's going bankrupt. I'm going to go all in on the short. So what happens is this: there's usually a squeeze before it goes down, because there's a lot of people that want to get out. You remember AMC stock? You're like, what the fuck? It tanked a little bit and ripped everybody up, right? And then went down and went back up. Insiders need to get out. Their friends and family need to get out. Funds need to get out. The funds don't have access to insider information right now. Take a look at SIVB. How many IO? Let's take a look. That'd be interesting. It's institutional ownership.
I was putting fantasy orders or somewhere already.
96.5% investor institutional ownership. 96.5%. It's a real company. You don't think these institutions got out? They're trying. They can't get out. There's no liquidity. And plus, they woke up just like us. And what the fuck happened?
Yeah.
They're calling the guy at the bank. The guy's not picking up. So how you make money? Don't fucking short this shit this low. You're going to wait and watch where it capitulates, where the fear is at the maximum, where your mama, your kids are loud like the door trying to take your money out, trying to scare you into bankruptcy. At that point, go long. After everybody gets out. I don't care where it is, but if you short, put a stop loss. So Fannie Mae went down from pennies up to like $5, where the fuck it may be.
Yeah.
Okay, because people thought Fannie Mae was going bankrupt. It did. It went to the bulletin boards and went bankrupt. But nothing goes to zero, guys. Fannie Mae is still trading at 43 cents. I looked up right now, 43 cents. I thought it was going to go bankrupt. Nope. How long did Kmart and all that? Okay, so there's always an opportunity. The opportunity for short selling was yesterday. Was Friday, right? SIVB was $700 not too long ago. Take a look at the chart. This is a very difficult stock to. It's gonna be so It's gonna be so liquid, man. It's gonna jump up down like crazy. It's gonna be very difficult to trade. I like to watch for fun, but those want to gamble. Okay, you have to put stop losses, and you have to, in my opinion, the way you make money. Look at FRC. Look up the chart FRC, guys. FRC. Look at Friday. They thought FRC, First Republic Bank, is going to go bankrupt, just like SIVB.
Yeah.
And take a look what happened. Look at 100% squeeze, right?
Yeah.
Look, guys at home that are watching this, FB. I don't know. You put the chart. How did I place the chart, guys? How did I paste the chart?
I don't know how you can do that. We need our technician Joe on the line.
How do I comment?
You should have a comment section to the right. So you
I do. But how do I type it in myself?
I think 10 days goes to 9 days. That I'm not sure. And
Okay, but anyways, guys, what was the low? Let's take a look at the low. The low and the high. FRC. I didn't touch this shit, but I'm like, this is not my niche. So, the low was, it opened at $70. The low was $45, and it closed at, where did it close at, guys? $75 or something? 77? Where did it close?
45.
It closed at $78. $78. Okay? It closed at $78. Here, I'm going to show you now. We'll post it in the MIC chat. So join MSC, guys. So it went from actually the day before was $95, guys. It went from $95,
There we go.
to
there we go.
$45, and it bounced. It's like 100% bounce. Because you see, that's where the money is at. The money is made when there's fear and panic. So sick, right, guys? So that's the sort of bounce play that you would want from SIVB, Silicon Valley. You're looking because it's not going to go to zero. Regular stepped in, and it takes time. And so, bankruptcy. So everybody, when it goes in bankruptcy, it's the best time if you really track it to make money, because there's so much speculation up and down. And so the moment it starts to turn, because there's a lot of people that want to get out of the stock, guys. And so they would make a scenario just like AMC. The apes want to, the insiders want to get out, whatever the fuck. They're going to bounce this stuff so that the insiders get out. And the moment the big guys get out, it's going to tank down. So there's going to be a period of big 100% bounces, just like FRC. You saw that. How the hell is a company at FRC bounced 100%? Because it was $120 2 days ago, went to $45 on fears, just fears. Let's look at JPM. Let's see what Kramer did to JPM. JPM tanked and went all the way back. JPM is a real company, so it's and it's just purely speculative. There's no reason, but the whole sector goes down, so it's a sympathy play. So where you make money is this: shorting is an obvious thing, but you don't want to short low. You wait for it to do the 100% bounce, right? Like FRC. So if it bounces back up to 95, 100, 120, those are the FRC, you see? But when it's something like $45, unless it's truly happened, not speculative, you just got killed shorting it. So don't short low. If you miss it, you miss it. And just wait for the long. Wait for a capitulation to happen. Wait for it to start bouncing up, and you just go there and you put a stop loss. These things are notoriously difficult to trade. If you are on the wrong side of the stock and you do not have a trading plan, which includes risk management and stop losses, you're going to get wiped out, because all you do is you're reacting. Play the news. The way I play FMA, I made a lot of money through FNMA, because people thought they're going to bankrupt, and then their Senate hearings to bail them out or not to bail them out. You know what I'm saying? The government was going to take over. There's all these speculative shit, and that's how I made my money. I made my money by riding it up and down. I made my money twofold. I went long when they had a Senate meeting that says they may bail them out, whatever, and so it started going up. But it's all bullshit. And so the moment it reaches the top, I shorted it. So the way you trade this is you have to be smart, guys. Don't go for the hype. No, the thing that I did well is I knew that these companies don't go bankrupt to zero right away. But when you're new trading, he's like, oh shit, it should go to zero. Why is it not zero? 6 months later, it's still not zero. What the fuck? It won't go to zero, guys. It won't go to zero. It's going to be a long time because you have bankruptcy proceedings, you have to liquidate. And so during that time, there's a lot of good opportunities to trade because there'll be speculation. Speculation is how you make money day trading. There'll be speculation you make money on speculation, right? So it's speculation that Silicon Valley Bank is going to go bankrupt. It's going to fail. That's why it tanked, right? That's money right there. So if people are speculating it's going bankrupt, you short. But you're too late now, right? The news is out. So in my opinion, it's going to tank really badly on Monday if it opens. And then what's going to happen is it's going to bounce. I guarantee you, it's going to bounce sometime, big time bounce, because everyone's scared, right? When you get all the week longs out, right? That's no more selling, right? It bounces. It's called dead cat bounce. And so if you're in this stock, good luck. I would dump it, but don't dump all. Take a look at the support. That's it. I mean, this is when it opens, it's going to gap down, guys. And that's the thing, man. It's really difficult you just have to. I really don't know what the hell's going to happen, because if I'm in this stock, I will dump half. I would dump half because for fear go lower.
It might be purchased anyways. I mean, there's no way of actually knowing what's going to happen.
Mm-hmm.
Yeah.
And then what I'm going to do is I'm going to trade myself out of it, or just fucking walk away. Say I fucking fucked up. And then, but it's going to have a big bounce sometime. Okay. It's good because what's happening is like everyone's going to start selling. He knows it's going to start selling. And then when everyone panics, they're going to panic everybody out first. It's not they, guys. It's the people that have it. They when you get a margin call, a lot of these people are on buying this on margin, right? The broker is going to automatically sell them out. You have no choice. If you go under 20% of your, if you're just a normal day trader and you bought at $34, I see some people on Twitter buy at $34 and you wake up, it's at fucking $5, you're done. If you bought on margin, you're done. So it's going to gap down artificially lower. It's because the brokerages are liquidating everybody at market. And so you're going to get that's why you're going to get that dead cat bounce, because depending on how much it goes down, and in my opinion, is $5. Everyone is getting liquidated. That is on margin. Okay, if you're on fucking full margin on this shit, you're done. You have no control. You're gonna wake up, your account is locked, and your broker has your account set to sell at market, at open, sell open, whatever the fuck it is, right? And so that's why you get this gap down, and so you're gonna get a big boom. And so once they get everybody out, the market makers, who's buying this stuff, right? The shorts are buying this, but more importantly, the market makers, they see all of the orders from the brokerages. They see they see all the positions as flagged as sell at market, sell at open. And so they have, these are all algos, guys. It's not a human being doing this. This is like a supercomputer figuring out all this shit. They have all the data. They know exactly where to fucking open up to take all of the sell at market. Okay? And so they're going to take all that shit and it's going to bounce. Because I've seen that. Because a lot of the newcomers, they go, it's going to go to zero, right? And so wherever it fucking opens, it's going to go a little lower, obviously. And then, in my opinion, it's going to bounce. It's going to have a big bounce. And then, you don't sell that big bounce, you're fucked. You chase that big bounce.
Yeah, and then comes a fade.
Yeah, slowly fade. And then it's going to consolidate for the rest of the day. Pending new news. So what it's trying to do is trying to resolve all of the upside down longs that are on margin. So the broker is going to sell everybody out. And then it's going to panning out all the normal people. And then the funds, whoever funds, they're making a deal right now, guys. I'm pretty sure. These funds, if you have fucking 10 million shares of this, how the fuck you get rid of it, right? How do you get rid of it? So you're going to make back-end deals with people. This is the whole thing that you saw with the Lehman Brothers kind of shit, right? I'm going to sell all these credit shit. I'll give you 50 cents on the dollar. You're shopping around, shit like that, right? And so they're making their back-end deals already. So it's difficult from a retail point of view because we'd have so little exposure to this that we don't know where the fuck is going to happen, because they will open it where the fuck that they find a buyer. Okay? Someone's going to step up. There's going to be a price that someone step up. And the person that steps up is the person that understands their balance sheet, that has gone through. They have 2 days over the weekend with 100 associates, junior bankers, no sleep. Figure out exactly how much money Silicon Valley has exposed, how much money do they have in case of liquidation, bankruptcy. These are numbers that they can find out, right? If taken enough time, they'll find out exactly how much cash they have, how much assets they have, stocks. They can make sense. And so they know the value of the bank already. So it's just them trying to get people out. The algos are trying to figure out. So they get, and so that's a sort of nature that you're fighting against, dude. This is why I trade small caps, because small caps, everything is a scam. They're not fucking big banks working with $1 billion research firms to figure out what the value of GNS is. It's zero. Right? So now you understand how this works, man. Because they're trying to find a buyer for the stock, just like they're trying to find a buyer for the bank.
Yeah.
So there's at some point BlackRock is gonna step up. I'm gonna fucking buy $1 billion of that shit, right? Or Citadel, right?
Yeah.
So they're just trying to figure out what the price that the bank is worth, because they're gonna figure out from the regulators and weekend. It's all insider job, guys. It's all insider shit, right? So how do you make money? Once again, do not chase the hype. If this thing is tanking, if you want to join it, do it, but set a stop loss, because it will reverse quicker than you can mentally stop out. And when that happens, it may halt.
We'll talk about it in MIC, in main chat. We'll be talking about it in the day.
Yep, we'll talk all about this. We wake up and you do this. So,
yep, we're coming up on an hour and 45 on this, which means it is time for us to start wrapping it up here.
Any last questions, guys? That's it. Yeah.
Val, you've been incredibly informative, man. This has been
this is really good to listen to.
Very rarely I get to just sit here and listen, and that was awesome.
So 2008 to 2022 is 15 years. Well, I'll see you in 15 years for the next one.
When the next
I'm not joking, right, guys? It'll be like the AI bank, artificial intelligence. That's some fucking shit's gonna happen, dude.
Yeah.
Any questions, guys? Well, we'll see you online on Twitter, MIC, wherever it may be, guys.
Yeah.
Success Trader, guys, is completely insured. We'll send out a letter, so don't have to worry about Success Trader.
Yeah. And
All right,
thank
guys. Thank you. We're gonna post this up maybe tomorrow or something. I don't know.
Yeah, we'll post it. We'll let the recording come through, and then we'll post it.
Yep.
So yeah, thank you everyone for joining. This has been super informative. Thank you, Bao. Thanks everyone.
Yeah.
Definitely a great, awesome live. So
Very much.
yeah, I mean, we'll leave it at that. And thanks everyone. And yeah, see ya.
All right, thanks, guys.